Welcome to VacationLord.com, your source for tools and tips for managing vacation rentals. About how to file your tax return if you're renting a room in your personal home. So under this rental situation, you are renting a room that's in the home that you live in. It's not a home that is specifically set up either for short-term rentals or vacation rentals. Now, with the advent of sites like Airbnb, this is becoming easier and more common than ever, and it may be the situation that you're in right now today. Now, you may be wondering, well, I'm renting my home, I'm making money, how do I file this on my tax return? Or do I even need to file it? So we cover all those details, uh, and by the end of this video, you'll have a very good understanding of what you need to do in order to file this on your tax return. Now, the very first thing you should know is that if you rent your room, or if you rent any property for that matter, for 14 days or less, you are not required to file a tax return. So that 2 weeks is something of a minimum where if you do more than 2 weeks and you do it consistently year over year, then it is expected that you should file the property on your tax return. So that's the very first thing. If you don't meet that 15-day threshold, then you don't actually have to file. Now, if you do meet that 15-day threshold, then you're going to need to go through all of the forms required to put it on your tax return. Now, we're going to cover what is the most common situation for people who rent rooms. And we're going to go through this at a detailed level, but here's the high-level summary. You're going to file what's called active participation status. This is actually the most common filing status for rentals, even in a situation where you're renting a complete home out. And simply put, what this means is you are renting as a side job. This is not your main business. Your business is not renting homes. Your business is something else. Maybe you have a day job. Maybe you have some other business that's unrelated to the rental. So that's the first criteria. And the second thing is we assume that you are at risk and that you own the property 100%. And what that means is you bought the property with your money, and your money is at risk, meaning you spent your own money and not someone else's money. And that's usually a fair assumption. Now, unlike rentals that are 100% rentals, as opposed to being a room rental, under this room rental situation, is it expected that you might have personal use for the property? And there are ways to specify that as we go along. So don't assume that just because you're renting it out that you can't personally use it. That's definitely not true. So these are all the assumptions that we're making here. So let's get started. In this video walkthrough, we will be using Intuit TurboTax, the Deluxe Edition. Now, to get started on your rental activity, we go to the main screen, the very beginning with personal info, and we're going to go directly to the forms or the topics for rental activity. So you hit topic list, go down to rental income schedule E, say OK. And so we've already entered information for a property to ease the walkthrough here. So we're just going to go through each of the screens that are related to that property. So the very first thing you'll see is they're asking you if you are a real estate professional. Now, generally speaking, in almost all the cases, if you're renting a room in your home, you are very likely not a real estate professional. And even if you were, you would have to act in totality through all of your business. You would have to conduct your rental as a business as well. So this is most likely not the case. So you would say none of the above. Now, so this is the room. We've already entered a property here. We're calling it room rental, 100 Main Street. So we're going to go through this. So instead of adding another rental, we're just going to say edit. So the first thing you want to look at is this is a summary of all the different information you're going to need. Now, it helps to have all this information summarized ahead of time before you go into this form. And we have a spreadsheet that enables you to do just that. There is a related article that goes along with that spreadsheet, and it's linked in the summary below. So we suggest that you look at that article and spreadsheet and use that to tabulate your income and expenses. We'll go into the details here, but that'll be a tremendous help for you before you get started. So let's go through the walkthrough here, and let's start with property profile. Now the first thing is you just enter just information about your rental property description as well as the address. Now we're going to say vacation or short-term rental because you're not renting this 100% of the time. It's a room in your home, so it's very typically a short-term rental, and it's not a property that is 100% rented. And here's the key thing: there are special situations that apply in your activity. Most of these are probably not relevant. You may want to go through these and see if they are. The important one is you want to say, I rent out part of my home. That's the important one that you want to check so that you specify that you're renting a room. This might be, I converted property from personal use to rental. That very well could be true. If that's true, check that. Otherwise, let's go on. Now, there's a question here about whether you rented the property all year. Now, this really is a very confusing question here because what they're really saying is, did you rent the property in the time that you owned it? Did you rent it at fair market value? And most likely the answer is yes. Now they give you the opportunity here to specify personal use. We don't suggest you do that here. We suggest you say yes, and say yes that it was at fair rental value. Now if you did have days where you didn't rent it at fair market value, you can just enter that as a personal day, and we'll get into a different screen later where we'll specify that. It'll make it much easier to work through the numbers here. So we suggest you just say yes here and then also yes here, and we'll specify personal use later. Most people don't have an home office, so we'll say no to that. And here's where we get into how you calculate deductions. Now TurboTax suggests that you say yes to this. And what this means is you have expenses for your home. It could be for, usually those expenses occur at the whole property level. So what TurboTax is saying is, tell us what the expenses are for the entire property, and we will prorate that expense for the rental activity based upon how much of your rental use. And we do recommend that you do this because it does simplify it, and it makes it easier for you to capture as many expenses as possible for your rental activity. And in order to calculate it, you need to specify what's called rental use. Now, in the accompanying article associated with this video, we have a summarization of how to calculate rental usage. So rental use percentage is the combination of two numbers. It's the combination of the square footage of your property that you're renting out. So for example, if you have a 2,400 square foot house and the room you're renting is 480 square feet, the percentage you're renting out would be 20%. And then there's another number. You may not be renting it 100% of the time. So for example, let's say you rented it 100 days and you also used it personally for 100 days. And the way you calculate that is your rental use would be 50%, 100 divided by 100 plus 100. So that would be 50%. So you take 50% of the 20% number that we just calculated, and you would get 10%. So that's how that number is calculated. And next, you want to say, yes, I'm an active participant. This is the most common case. And what this simply means is that you were responsible for making decisions about the property. Given that it's your personal home, that is most likely true, so you'll say yes. Did you pay anyone for work? Under most situations, no. In this introductory video, we're not going to get into 1099s, so we're just going to assume no for the moment. And here we're going to enter, they're asking you how you want to enter your information. To do the walkthrough, we're going to enter it manually. These situations most likely do not apply to you, so we're just going to assume none of the above as far as designated areas, whether it's disaster area or other areas that may get special consideration. There we go. So we just finished the property profile. Now what that does is that will set us up for income and expenses, because when we specify expenses, those expenses will be allocated based upon that 10% rental usage that we specified. So let's go to income. Now, income comes from generally three places according to this form here, but there are really only two ways to specify it. So you have income that's reported on a 1099 MASC, and you have everything else. That could be your own personal rentals. It could be Airbnb income. It could be VRBO income. There's also something called a 1099K. This could be something, a 1099K that maybe PayPal sent you for some kind of income. That's generally uncommon, but if you do get a 1099K, you would specify it with your Airbnb income as well, and we'll go into that when we get there. So if someone did send you a 1099, you would just enter it here. And the important thing is to specify the name of the company, the payer ID, as well as the rent. Those are the three important things that you want to make sure you specify there. These other general withholding tax, these are not common, so it's unlikely that that would be the case. So there you go. If you had more than one, you would just enter one for each form that you got. Now, so we've already specified $100 off a 1099. Now, here you specify all your rental income that was from everywhere else, as we just mentioned, which including a 1099K. So you would just specify that here. Okay, let's get into expenses. So let's talk a little bit about this. Expenses can occur at the property level as well as for the rental activity itself. And when you enter, so we'll refer you back to that spreadsheet. These are summarized expenses that we've already tabulated. And the key thing to understand here is that all of these generally will be prorated by the rental use. And you don't have to do that. The software will do that automatically. So for example, for repairs, it's $2,000, but we specified rental use of 10%. So the actual expense you'll be able to claim would be $200. However, there are some expenses that are for the rental activity alone. And on this screen, that includes advertising and commissions. So the software already understands that, and you don't have to do anything because those will be claimed 100%. And we'll see that in the form when we get to that later. Now, in terms of mortgages, if you have a mortgage on your property, we're going to cover here the most common situation. So generally what will happen is you will get a Form 1098 from your bank, and you would specify that on here, say $3,000. Now, in the first year that you bought the property, if you uh, if you bought it the first year and you started to uh, rent the property that year, you want to make sure that you include your closing document interest. It's very likely in that there'll be interest that you have to prepay on your mortgage in your closing. You don't want to miss that. Now, that would only be relevant in the first year. Also, in that first year, if you had points that you paid on the original mortgage, you can also deduct those immediately. Now, in this day and age, points are not very common, but we put them in here for just in case you do have them. Now, and you also want to check this. I paid more interest than shown in my Form 1098. And this tells the software that essentially that we paid more interest because we paid it in our closing costs. And then you just specify in the description why you have more interest than what's on 1098. And the reason is because it's closing cost interest. This other type of interest is not common in this screen. This could be interest that you paid on a credit card bill for expenses. We're not going to get into that here, so this is generally not common. Also, this is another way to specify closing cost interest, but given that we already did it in the previous screen, we don't need to do it here. So we'll say nothing there. Now, here's a final screen to specify any expenses that were not accounted for previously. And this is actually a quite confusing screen, and we're going to try and explain what's going on here. So it says enter any other rental expenses. Now, expenses tied to the rental would be deductible 100%. Expenses tied to the property would not be deductible 100%. They would have to be allocated to the rental activity. So it's actually not clear here because it says here, since we are allocating. So what we're going to do here is we're going to enter two expenses, sales use tax, and we're going to say association fees. Now, if we leave this as it is, what will happen is both of these will be prorated for the rental activity. In the association fees, that's correct. For the sales and use tax, however, that is not correct. We want 100% of that to be allocated to the rental activity. So we'll do that. We'll show you how to do that just in the next screen. Okay, so there we are. All of our expenses are done. So in order to fix that, we're going to go to Forms, and we're going to go to our Schedule E. Now notice we have here sales use tax and association fees. Now our allocation is 10% that we just calculated previously. Now we want to tell the software, no, this expense is associated with just the rental. We want it 100%. So that's the way you would do that. Just say 100% there. The association fees would take the default of 10%, which is correct in this case. Okay, so there we are. We've done our expenses. Now let's move on to depreciation. A short summary of what depreciation is. Depreciation is a non-cash charge that you claim as an expense that accounts for the decrease in the value of real property. Real property meaning your home, furniture, construction equipment, so forth. Pardon me. So the very first thing you would need to do is to depreciate your actual rental property. Now, what you want to do is you want to also prorate it, you want to allocate it based upon the percentage of rental use. Now, previously, we've already calculated our expenses as 10%, and so for for the depreciation, we only want to allocate 10% for this calculation as well. So let's get started on that. So we're going to depreciate the rental home. We're going to specify rental real estate. In this case, it is residential real estate, so we'll stick with that. And we just, you want to enter information about the property, and you want the amounts for the entire property, not just the rental. So the cost basis is $500,000, and the cost basis is not just the purchase price; it also includes other closing costs, and those are covered in the spreadsheet that accompanies this video. If you use the expense spreadsheet, and the cost of land. So those are the two important numbers. Now, here you're going to specify how to calculate depreciation. None of these really apply because this is a home. You're going to say none of the above here. Uncheck that. Now you want to make sure that you say, no, I have not used this item 100% of the time for business, because you have personal use. It's a home, and it's a room in your home. So it goes without saying, unless you don't live there, this will be true. And this and the next check, I used this item for personal purposes before I started. That could be true. And this also could be true, but that won't really affect the calculation at all. So you specify the date you started using it in business. We're just going for the first of the year. And here, the key number here is this 10%. That is the same number that we calculated previously as the rental use percentage. So make sure you specify that. And here we go. So our depreciation expense is $1,394 based upon that 10% business use. So there we are. We won't go into keep this video focused. We're just going to stick with that depreciation and move on to the next topic. Vehicle expenses. Now, if you used your vehicle to service your rental, you are entitled to a deduction for the mileage and expenses that you incur. Now, it goes without saying that because the room is attached to your home, you don't really have to travel very far. So you would expect that this amount of mileage would be very low. And if you're using a personal vehicle, it might only be 5%. So don't be too aggressive with this and try to actually track your mileage. Say you travel to the hardware store, or you travel to pick up supplies, or whatever it is that you associated with your rental activity. So let's get started. And the assumption here is, and this is a fair assumption for most people, that you're just going to be using your personal vehicle a part of the time in your rental activity. So here you're just going to enter a name and when you started the use, and it's most likely you might have a truck that's over 6,000. That's possible. Just to specify what kind of vehicle it was. I'd say you specify this based on what your situation is. Most will say you own the vehicle. Yes, this vehicle was available for personal use. That's a very fair assumption. And you may have another vehicle or you may not. Check it as appropriately. We do suggest that you document your miles. This is a good practice so that you can claim the most accurate deduction. Now here's where you specify the mileage. Now this 12,000 is the total mileage for the entire year, and the mileage driven for your rental activity. Now we specified 1,000 miles here. That's probably pretty aggressive. We're doing this for demonstration purposes, but enter whatever number that you came up with based on your own usage. And then commuting miles. This doesn't really affect anything, just the form requires it. So enter a number that you used for work. How many vehicles did you use? Most likely it's one. Did you use the standard mileage rate in the first year? We suggest that you do use the standard mileage rate, so we're going to say yes. And here you have a standard deduction of $575, and we do suggest that you take the standard mileage deduction. It's a very generous deduction. I believe it's 58 cents a year. Very, very simple. You don't have to enter all your expenses. So make it simple and go with the standard mileage deduction. Now, if you have parking fees or tolls, you might want to enter those here because this will give you an additional bump because these are not accounted for in these expenses are not accounted for in the standard deduction. So if you do have these, enter them. Because as you can see, our deduction went from $575 to $775 because we had those tolls and rent. Okay, so there's the end of the vehicle. Okay, so now we're done with our rental property. So now the question is, did we make money or did we lose money? So click Done with Rental Property. Now, check any of the following that apply. I'm not at risk. I disposed of assets. These are not common. The most one that might be relevant is money not at risk, but as we talked about previously, we assume that you bought the home with your own money, with your own mortgage, and you didn't use anybody else's money, so we're not going to check this. Okay, so there we go. We have a profit on the property of $31. Good work. Now, you have a profit. There's something called qualified business income, which allows you to deduct some of your income from income taxes. Now, generally, this would not be the case for if you were renting a room out in a typical situation. You'd have to actually be running your rental activity as a business. So this is really not common, so we're going to say no. So there you have it. There's our rental and royalty summary for our room rental. We have a profit of $31. So let's go into the forms to see how everything worked out. Now at the highest level, your $31 profit would show up here in other income from Schedule 1, Line 9. And that would be added to your taxable income. So you would pay taxes on that amount. Now at a detail level, you go to Schedule E worksheet, and we just go through here and say, just make sure everything looks good. Active participation, looks good. Allocate owner-occupied rentals, percentage of rental use 10%, that looks good. Our income looks good, 5,100. Advertising was allocated 100%. Commissions are 100%. And then everything else here would be 10%. And you can see all these other expenses were allocated at 10%, which is what we expected. And there you go. So you've just completed your first tax return for your room rental. If you have any other questions or that may apply to your specific situation, just let us know. You can enter comments below this video or article, as well as you can contact us at our website, vacationlord.com. Thanks for watching.